Now, construction hardware supplier Hillman went public via a reverse merger with blank check firm Lancadia Holdings. It's a SPAC run by Tillman Fertitta and Jefferies Group CEO Rich Handler. Joining us to discuss the public debut, inflation, as well as the housing market is the CEO of Hillman, Doug Cahill. Doug, thanks very much for joining us. Talk to us first about the decision to go with a SPAC. Obviously, we've seen a lot of interest that seems to have turned over in terms of public investing, but now we're finally starting to see these blank check companies do deals. Why did you go with a SPAC?
We have been owned by private equity the previous 15, 20 years, and the opportunity with our relationship with Jefferies and watching them take companies public, Rich Handler and Tillman completely got our story and understood what Hillman was all about, and it was a great fit for us. We thought we could get out, and we have been for 17 years doing Qs and Ks and publicly reporting, so it wasn't a long putt for us to get there, and they were great partners for us.
So what do you want to do in terms of the proceeds, in terms of investment, in terms of moving forward?
Yeah, we're going to take all the proceeds and pay down debt. We're excited about that. The balance sheet will be much stronger. That'll enable us to continue to keep up with our great customers like Lowe's and Depot and Ace and Tractor Supply. It'll also give us a currency for acquisitions. We've got 1,100 people in the store each and every day taking care of the complexity and the logistics and the labor problems for retailers. So we see a lot of opportunities in adjacent categories and other categories that our customers have talked to us about. And having half the debt load that we've traditionally had is really going to put us in a great position.
You're in a great position to tell us your view on inflation. As a supplier of goods that I'm guessing are going up in cost, at least input costs must be rising. Are you able to pass those prices on, and how do you see inflation?
Yeah, it's across the board. It's labor. It's trying to get goods into the distribution center and the stores. Clearly, things like steel, just about everything. It's an across the board inflation for a company that's been around for 57 years. We've not seen a run quite like this one. And it's going to be and is being passed on to the consumer, unfortunately, because it's just too big.
So is it a blip? Is it transitory? Or is this, structural inflation that's here to stay?
It feels a little of both. High prices traditionally solve high prices. You saw lumber go from $400 to $1,600, and then 2 weeks ago below $700, this week below $600. So it kind of seems to be all over the place, but I will say logistically, getting products and goods and labor, those two seem to be more long-term than things like steel and lumber, which I think will bounce around.
That's interesting. So you think labor is a long-term issue? You don't think that, for example, when benefits run out in September, we're going to see a lot more supply on the labor side?
I don't. I think there'll be a continue, fight for good labor and for folks who do a great job taking care of customers. I don't see that slowing down. Yeah, there are outside forces that are causing some of this, but long term, if you can take great care of your customers and your people, you're going to win. And I think the labor challenge is here to stay.
How else has the pandemic, do you think, changed your business?
Certainly the home has significantly changed from this place where people would eat, sleep, and watch TV, but now it's work, it's school, it's obviously entertainment, probably one of the biggest parts for recreation. So we're seeing projects in the home based on getting set up for those things, both with the DIYer as well as the pro. People are thinking very differently about their homes in the future than I think they have in the past. That's probably the most significant change.
And you think that demand is sticky?
No question. People have a list of projects they want to do. They're fighting probably in the next 30 days with time, because a big Saturday a year ago at this time was to go to Depot or Lowe's or Ace. Now they're out and about, going to the lake and having what we're happy about, vacations and spending time with relatives. But once back to school, those projects will kick back in, and I think we'll see very nice demand for what has been pent up and what people, we taught 2 generations how to be DIYers on YouTube in 9 months last year. They bought homes for the first time. They're doing projects, and we see that continuing.
Could be a pretty busy Saturday. Doug, what do you expect then in terms of your business, revenue growth, margins?
Over the last 20 years, we've seen 6% top line organic. We've grown 55 out of the last 56 years because we're really focused on repair and remodel with the big retailers. That's a DIYer and the pickup truck pro. And I think 6% is a good number ongoing. Again, we've got 20 years of history with that, but that feels like a good number for us going forward.